Hello, fellow traders. 'Tis I, the Rumpled One. Trading question that a lot of traders don't consider. Today's topic: do you use the same chart for entry and exit? I mean, think about it. Should you really be using the same chart? Now, if you're trading naked chart, well, of course, but then again, you might switch time frames because it's not the same chart. So, I think it's a valid question. Let's explore. Many of you traders might recognize this screen. It's the rat zone where we have the current daily low, the current daily high, and these zones which are 20 pips. Why? Because we know if price enters the zone, it likes to exit the zone. If price enters the zone, it exits the zone. But the question is, should you use the same chart? Well, I like to have a totally different chart for exits. In fact, I've got it on the. I usually like to use a 5-minute chart that has a few different indicators. Because once I'm in the trade, I have a indicator that tells me the profit and loss, and it gives me what's called the average. So if I add one more unit to the trade, what will be my new average? And if I was actually in a trade, it would have the lines drawn so I could see it on the chart. I also have, I call it my exit indicator, and it shows me what different indicators are telling me which way to trade. So in this case, they're saying you should be short. So if you were long, you'd be in problem. If you're short, then you might want to stay in the trade a little bit longer. As opposed to here, I'm just looking for my entry trigger that tells me to get in. So as some of you know, I use the rat reversal, red candle close, green candle close, go high, and see here you could make some pips. And the same thing here, you could have made a few pips just scalping. Of course, if you were a red rat and you were even late in the trade, instead of getting in here at that low of that red candle, or you could have gotten in here at the low of this red candle, you had a nice trade down to the current daily low. So I think there's reasons for having both. Either you could say, nope, I'd rather stick to one chart. As soon as that way I can stay focused. But to me, there's certain things I want to use, certain reasons, certain triggers that cause me to enter a trade, whereas there might be other triggers that cause me to exit a trade or stay in a trade. For example, this magenta dot, this aqua dot, you see it's at the same level. This was this candle's middle. This is the previous candle's middle. So here, so long as price stays under these dots, the previous candle middle dots, I'd want to stay short. But if it closed above, then it's time to exit. You can see here what I'm talking about. You see here it still closed below, but here it closed above. So you would have exited that trade. Even though here it closed below and you could have made more pips, but that's hindsight. Or if you were long, you can see here it closed above, closed above, closed above, closed below, you exit the trade. That's just using one, this simple previous middle, just using that one trigger to say either stay in the trade or exit, take your money off. Then of course I've got my candle color multimeters. Oh, I forgot to update with the new one. But I want to know, is price making new highs or new lows? You can see here it was below the previous low but not quite making a new low. As soon as it makes a new low, it'll glow bright red. If it makes a new high, it'd be bright green. See, right here we're below the previous mid across all time frames. Here, do we have any price turns? Well, we're at the bottom here, deep blue, meaning deep blue C. You see here, in other words, price turned way back here from green to red, and it's just getting lower and lower. And see, now we're getting the price turn red to green, indicators showing that. And the linear regression 45 line, that's something I've been working with F, that and the 9 linear regression lines. You can see here price is below the linear regression 45, and the 9 linear regression lines 5 are over price, telling you to stay short. So the higher the number, that's the more lines over price, meaning go short. If these were green, it was under price, meaning go long. You can see here how these colors are changing. So if you were short, you'd want to be out because it's telling you price is going up or should go up, or statistically it'll go up. So I know a lot of people, a lot of traders can't sit on their hands. They get trigger happy. They enter the trade too quickly and they get burned, or they exit. Just like here on the rat reversal, I'll tell people, if you're getting burned with the rat reversal, then let's go all the way out to the hour candles. And as you can see here, using the bias and turn the trading wheels on, it'll tell you which way to trade. So you see right here, if you switch to hour candles, you wouldn't have gone long to hit until this point. And if you actually used the rat reversal, you would have had red candle close, green candle close, high would have been right there. It would have gone up and come back down. You could have exited with the profit. And the same is true. See right here, if you use that same high, it would have been good for a few more pips. But the point is here, if you can't sit on your hands, go out to a higher time frame, and that'll really make you sit on your hands because your signals won't come as quickly. And it's the same for exit. See, most of the time I'm using a 1-minute chart for entry. But if I'm in a trade, I hate to bust out of the trade too quick and leave too many pips on the table. So if I'm getting in a run, I'll trust these mid dots and I'll wait, and it usually will give me anywhere from 3, 5 or more pips, because a lot of times it'll run up 5 pips and start to drop back. I'll punch out at 3 pips to the upside only to see it run up to 10 or plus 10 or plus 15. So fellow traders, I'd like to hear you chime in. Do you use different charts for entry or exit, or do you stick with one chart? In either case, it's not what you trade, it's how you trade it. TheRumpledOne signing off.